Hello, and welcome to Your Money 2.0. I'm Thomas Fox, Community Outreach Director of Cambridge Credit Counseling. Hot on the heels of sweeping credit card reforms are new rules from the Federal Reserve to provide enhanced protections to consumers. The first item on the Federal Reserve's agenda was a measure designed to create reasonable penalty fees. Penalty fees are those costs you and I incur if we make a late payment or go over our credit limit. This has been a particularly touchy subject with consumers because the fees assessed so often seem excessive when compared to the relative insignificance of the infraction. For instance, if you are over your credit limit by $5, you can receive a penalty fee of $38, which is actually the national average. The Federal Reserve's new rule would limit the fee to the cost of the transaction that caused the event. So, if you go over your limit by $5, your fee for doing so would be $5. The same logic would apply to late payments, with an exception. The fee cannot be greater than your minimum payment. So, if your minimum payment is $15 and you make a payment late, your fee for doing so would be $15. The Federal Reserve has also capped these fees at $25, but that may change based on your bank or your behavior. Under the new rules, your credit card issuer cannot charge you a penalty fee greater than $25 unless they can prove that the costs incurred as a result of late payments justify a higher fee. The process for determination has not been released, therefore it's difficult to say how easy or difficult the process of evaluating these fees will be for regulators. You should also be aware that your behavior can cause you to incur a higher fee than the $25 limit established by the Fed. If even one of your last 6 payments was late, your bank can charge you up to $35. Therefore, it's even more important to make your payments on time. Another welcome change has to do with inactivity fees. These fees were the brainchild of the industry several years ago, but have grown in popularity as the economy spiraled into recession. Simply put, an inactivity fee is assessed to your account if you don't use your credit card. Inactivity fees have ranged from a monthly charge of $5 all the way up to $90. The new rules established by the Federal Reserve will prohibit companies from charging these fees. The Fed has also set its sights on interest rates. When the new rules take effect, issuers must reevaluate increases to customer interest rates every 6 months. If appropriate, your creditor must reduce your rate within 45 days after completing the evaluation. The new rules would also require your lender to be able to explain why you received an increase in the first place. If your rate were to increase, the lender will be required to inform you of the factors leading to their determination. The new rules go into effect August 22, 2010, so be sure to keep an eye on your statements. To learn more about these rules, you can visit the Federal Reserve's website at www.federalreserve.gov. Well, that's it for this edition. As always, we welcome your feedback and ask for your thoughts and suggestions by emailing us at yourmoney2@cambridgecredit.org. Thank you for watching. Until next time, I'm Thomas Fox for Cambridge Credit Counseling.